Hello, welcome to Bidwell's Spring 2021 Office and Lab Market Update for our ARC locations. Thanks for joining us today. When I did this last seminar, I don't think we thought we would still be in lockdown, but we are. And in the context of a 10% drop in UK GDP last year, thankfully, our Bidwells markets have remained robust and active during 2020 and into 2021. Today, we will canter through the activity in our forecasts. The running order will be Sue Foxley, our research director, will introduce. Malcolm White, our research consultant, will take us through the 2020 office market trends, themes and statistics. Our agents, Max, Brian, Holly Dawson, David Williams and Will Jones will give you some current market insight about their respective locations in Cambridge, Milton Keynes, Oxford and Norwich, and I will briefly talk about capital markets activity. Sue Foxley will chair questions at the end, so please use the tab below to send them in, and those that we can't answer today, we will follow up afterwards. So Sue, please take it away.
Thanks all, and good afternoon, everyone. It's not surprising that given the experiences of the last 12 months, we've seen an increased focus on the ARC and on the office markets there. It's attracted a lot of attention from investors, but that was going on anyway. There was already a heightened interest and understanding of the market. But over 2020, we saw a 43% increase in terms of investment activity, and that's equivalent really in the fourth quarter activity was equivalent to Leeds and Birmingham combined. So it's an awful lot of a lot of investor interest and activity. There isn't the stock that is needed to satisfy that activity, but we have seen increases over the last few years, and Malcolm's going to talk about that in a little bit more in a minute. The last few years, in terms of that increase in stock that's come through and more sophisticated developments across all the parks that across the region, really has driven an increase in lot size. And also, of course, that's had an impact on pricing as well, particularly in the lab market, which is now a lot better understood. Of course, this is all driven by the occupational markets, and Malcolm's going to go through that in a second. But the ARC story starts long before the pandemic. Of course, that what we've seen in terms of the AstraZeneca vaccine, the treatments that have come through, the genome sequencing, that is all built on a very long legacy of scientific collaborative culture across the clusters across the ARC. These are our cluster maps that really sort of just summarise for Oxford and Cambridge the depth of activity in terms of life sciences and high-tech engineering that we're making the ventilators in the early stages. You know, just in Cambridge, we've got 51% in life science occupation in terms of floor space, Oxford 34% in terms of office and labs, but another 15% in the industrial market. So there's substantial life science bases, but also an awful lot of other expertise that is important for the cluster as a whole. And with a industrial strategy that's really going to be driving, looking at tech and innovation as we understand it, these kind of areas are going to be really important. So to understand what this looks like on the ground, I'm going to hand over to Malcolm just to run through the markets through our latest analysis in a bit more detail. Thank you.
So could you just go back to the previous slide? Just thank you. Good afternoon, everybody. The sort of the focus really that we're talking about today is how the ARC markets have exited or come out of lockdown one. As Saul mentions, of course, we wouldn't have expected to have been in lockdown this time last year, or still in lockdown this time last year. We've had 2 or 3 attempts at getting out of it, but lo and behold, we're still back. Just move on to the next slide, please, Sue. In terms of activity over the past 12 months, we've seen about 1.1 million square foot of activity across our main markets within the ARC. About 25–26% below our trend level, and similarly about 26% below the level of activity that we saw in 2019. I think one of the interesting things about this year has been the real occupational focus or occupier focus on grade A space, which has accounted for about 62% of all lettings that occurred this year, significantly up from the long run average of grade A take up, which is normally runs at around 40% of lettings. Activity boosted. I suppose the interesting thing has been the main slowdown seems to have occurred in those sub 10,000 square foot lettings market. Number of larger lettings completed during the year. Second half of the year, we had MathWorks at Cambridge Science Park, taking circa 93,000 square foot. Fora taking 65,000 square foot pre-lets at CB1. And in H1, we saw Xero, accounting IT group Xero, take best part of 55,000 square foot at Avery Boulevard in MK. Next slide, please, Sue. Just to sort of give you a bit of an insight, you know, we're talking about how the market has exited lockdown one. As you can see in the graph, we had first 6 months of the year activity across the ARC markets down 44% below trend. However, there was a significant rebound in the second half of the year where we didn't quite get back up to trend, but that was, we'll have a look at that in at the next slide. That was really, or sorry, a couple of slides time. That was really due to several markets where activity was constrained for probably viable reasons. Next slide, please, Sue. Just looking at all the individual markets and the way that they've responded to coming out of lockdown one. In Cambridge office and labs market, we saw a very a slow first half of the year. Part of that, I think, may have been due to the particularly strong second half in 2019, but then a swift and quite rapid recovery in the second half of the year. And it's worthwhile mentioning that obviously a lot of those deals that happened in H2 were still being negotiated during that first half of the year. Majority of the reason behind that underperformance in the Cambridge market or below trend performance in the Cambridge market was due to a weaker sort of level of lab activity. And one of the things we've got to remember about the lab market in Cambridge is availability rates in that market are very low at the moment. There's only about 80,000 square foot of labs available in Cambridge at the end of the year, which is giving us an availability rate of circa sort of 2–2.5%, something like that. Oxford, on the other hand, all in all, a very good year, despite everything that's gone on. No real large mega lettings, if you like, or above 30,000 square foot. We had a good amount of activity in and around that 10 to 30,000 square foot. Oxford University taking 22–25,000 square foot of Trajan House second half of the year. But all in all, a very good year for the Oxford market, office market in general. MK, almost counter to what we would have expected, where they had a stronger first half of the year or first 6 months to the second half. I think part of that, you know, we've spoken already about the reasons for slowing in activity or the focus in occupier activity in grade A space, definitely shortages of grade A space in the MK market. So that may be partly the reason why we saw a weaker second half to the year. The Norwich markets, it's fair to say that the Norwich market saw quite a slow year in 2020, with both half one, H1 and H2 significantly below trend levels in terms of overall activity. But that's just giving you a bit of a, we've looked at the aggregate figures, that's giving you a bit of an insight into where those shortages or slower levels of lettings may have occurred. Next slide, please, Sue. And of course, it shouldn't be any surprise to us, given the focus of what's going on in the ARC, that knowledge-intensive industries, the likes of biopharma, tech, and IT and communications, tech industry, some of the high-tech manufacturing occupiers have really been the main driver behind what's been going on, as Sue mentioned, not just for the past 12 months, but this has really been a feature of the ARC market since 2013-14, where we've seen a growing amount of impetus and importance coming forward from the science and tech occupiers. This year, we've seen a little bit of a dip in the proportion of activity explained by this sector of the market. Really, that's partly due to our classification of flex work providers, where 3 to 4 significant lettings occurred during the year that we classify as traditional industries. So the Fora deal, for example, Manclaw also took expansion space in Cambridge. We have classified those as traditional industries. Those 2 deals alone in Cambridge accounted for around about 9% of overall activity in the Cambridge market. Just to summarize that, Sue, moving on to the next slide. So looking at how each of our sub-markets, if you like, have performed in terms of knowledge-intensive industry take-up in 2020, 73% of activity in Oxford was KI businesses or occupiers, about 64%, but don't forget, in that Cambridge number, we've got another 9%, which is co-working operators, and in MK, 49% in total. I think MK is an interesting example. This year, we've started to see, or it's actually not this year, it's going back a couple of years, we've started to see a greater intensity of activity from IT and tech businesses. So there's a real sort of, I think I mentioned this last time we spoke, there's a real sort of growing tech cluster that's coming up, part of it around the new MKU University, but also with Santander's new tech hub that should be built, I think, in about 2023. Moving on then to supply, and the next slide, please, Sue. I suppose, unsurprisingly, we've seen a slight uptick in supply, particularly evident in the second half of the year. Increase in supply across the full 12 months as a whole. Cambridge supply up by about 17%. Oxford supply up by 14%. Those 2 markets, the majority of that increase in supply coming through in grade A space. MK, interestingly enough, saw supply levels down by about 23%. And Norwich, similar sorts of levels to both Cambridge and Oxford, where supply edged up. And a lot of that, I think, supply coming back either tenants not renewing at lease end, or it may be that they're marketing grey space and reducing their footprint. Next slide, please, Sue. So across each of the markets, I think our overall availability rates across the ARC as a whole, around about 9%. We can see that both Norwich and Oxford have availability rates below that ARC average, Cambridge slightly above. I kind of expect the Cambridge, if you look at the Cambridge market, it's a very active market, and the turnover that you see take up as a proportion of total supply in the Cambridge market, very active and fast moving market. So I'm kind of expect to see a slightly higher availability rate in that sort of market where the turnover is much quicker than we see in not only the other ARC markets, but actually compared to the majority other markets in the UK. If we can just go on to the next slide as well, Sue, and I've just spent a little bit of time here, I suppose, trying to one, look at the growth that has occurred in each of our sub-markets, but also how active the delivery of new space, because remember, at the back of our minds, the proportion of activity that seems to be focused on grade A stock is around about 60% this year. So the delivery of grade A space onto the market over the past 10 years or so. So I've taken a little bit of a look at the total stock in each of those markets, and you can see the figures for each of the markets in brackets. I've actually included within the floor space stats the developments that are likely to be completed in 2021. So, for example, in Cambridge, we've included the AstraZeneca building, which should be occupied sometime this year. Plenty of delays in terms of completion, but should be finally occupied sometime this year. And I just want to look at, as I say, how dynamic the development market has been over the past 10 years or so. And let's just focus in on the Cambridge market, where the period from 2010 up to current day, around about 33% of Cambridge's office stock has been delivered in that 10-year period. Quite phenomenal in terms of development. If we look at some of the other markets, Oxford, and it's worthwhile saying that the Oxford uptick was a little bit slower, or didn't start in the science and tech revolution, if you like, didn't start at the same time as Cambridge. It came along a little bit later, and really the pickup in Oxford activity didn't really start until 2016-17, when we started really seeing an acceleration in activity. Only 11% of overall stock in Oxford has been delivered over the past 10 years. And then again in MK, similar sort of thing, around about 10%. And in Norwich, interestingly enough, I think since 2010, we've seen delivery of about 35,000 square foot, circa something like that, into the marketplace. So clearly, in some of those markets, a big level of demand and requirement for new space to be delivered for the types of space that occupiers are looking for. And just on to the next slide, please, Sue. And interestingly enough, despite all of the turmoil that we've had over the last 12 months, demand has remained remarkably stable. We've been operating in that band of 2.5 million to 3 million square foot for best part of six years or so now. I suppose the interesting feature to pick up in the latest figures is the uptick in demand from sub 10,000 square foot, or occupiers looking for sub 10,000 square foot. And another interesting feature in terms of our statistics, we saw an uptick in demand, I think, across all locations in the second half of the year. So that real shock that hit in Q1 that carried through into Q2, people were starting, or occupiers were starting to feel a little bit more confident about the way forward in the second half of the year, and that resulted in a slight uptick, not massive, but a slight uptick in requirements from the mid-year point. And just to summarize that again across our locations, for the next slide, please, Sue. We can see that the Oxford and Cambridge markets really dominate the overall demand in the ARC. About 80% of demand or requirements that we have on our systems focus towards those two markets. I think MK, there's going to be, once there is a delivery of new stock into that sort of MK market, and I also think delivery of grade A space into the Norwich market, that will facilitate and help requirements coming forward. Next slide, please, Sue. So I suppose all of this is quite interesting. We've got quite a lot of demand for space. We've got a reasonable amount of supply out there, but how does it all match up? And just restating, I think we looked at this again last time we had this session. There's a real sort of break point, if you like, at that 20,000 square foot size band. So units of, or suites, buildings of 20,000 square foot. Below that level, the way it looks at the moment, there's adequate supply. That's not to say that there isn't necessarily a need for some newer stock to come along, particularly in some of the various locations. But above 20,000 square foot, demand significantly outstripping levels of supply that are currently there, ready to occupy space. And we can see that requirements above 50,000 square foot, far in excess of anything that's currently there, ready to occupy. We do have a couple of buildings that will be completed. There's one at Tass Park, Cambridge Science Park, 100,000 square foot, the remaining building, which will be available. I think completing, Max will be able to confirm this, but I think completing at the end of this year, sometime during the year. So whilst not there and ready to occupy at the moment, we may see that change slightly, but still significant undersupply in that larger building size. And just again, summarizing that in a much easier slide to follow, if we move on to the next slide, please, Sue. Can we move on to the, that's excellent. So just really summarizing that, and this is the difference between, in square foot terms, the difference between current supply, existing stock, and amounts of requirements that we've got out there. And as you can see, the big shortfall really in that greater 50,000 square foot, we've got about 500,000 square foot of requirements more than we have supply. Part of that will be addressed, as we've just mentioned, but still there is a requirement for more larger buildings in the ARC area. And on to the next slide, please. So this was sort of a last minute addition that I thought about, because it's all very well as saying, wouldn't it be nice to start building lots of 50,000 square foot plus buildings? So I thought I'd just take a look at what activity in the greater than 30,000 square foot market has been lettings over the past 5 or 6 years. The big 2015 figure distorted by the AstraZeneca deal, so I've kind of taken that out of my calculation, if you like. On average, we've had about 300,000 square foot of activity in that more than 30,000 square foot lettings over the past 5 years on average. Last year alone, we had 5 deals above that threshold. Because of the shortages in space and because of the shortages in grade A space, 3 of those were pre-lets or forward commitments. And across the ARC as a whole, we've got 16 requirements of 30,000 square foot and above. Now that is that's a significant level of demand that we do need to see a greater level of availability or stock in those size bands and good quality stock to fulfill those requirements. So all of that, if we can move on to the next slide. Thanks, Sue. What's happened in terms of rents? This is where we are at the end of 2020. Cambridge prime rents up to 48.50. Secondary rents remaining stable at over the year at 40 quid. Oxford prime and secondary rents both up. Prime rents £45 and secondary rents up to 35. And MK, the interesting thing with MK, I think, is prime rents have remained at £28, probably because of the shortages of grade A space. But secondary rents have started to pick up some of that slack and are up to £25. Interesting noting the difference between prime and secondary rents in the MK market. Norwich, they've remained stable over the 12 months at 17.25 and 15.50 respectively. Again, shortages of grade A space really holding back that further growth in Norwich prime rents. Next slide, please, Sue. So rents over the past 12 months and indeed over the past 3 years have reflected the growing market within the ARC. Past 12 months in Cambridge, 4.5% growth, but over the 3 years, 7% per annum. Some exceptional growth seen in the Oxford market, where over the 3-year run, we've seen 12% per annum growth in prime rents. And again, I think that's partly due to the stock of grade A space that's been coming forward. And MK2, that whilst 2020 was a quiet year, or we didn't see any growth in particular, we have seen over the 3 years circa 18 to 20% overall increase in rental values. And just moving on to our forecasts, it's worthwhile saying, I think partly because the next 12 to 18 months is particularly uncertain. There is a little bit of release of secondhand space coming on. So our short-term forecasts, I would say, possibly look a little bit conservative. But moving on to beyond that sort of term of uncertainty, we're expecting rents to start to pick up again. We've got Cambridge offices up to £52, with Oxford at 48. I'll finish there and take any questions at the end and hand back to Sue.
Thanks, Malcolm. Thanks very much. We're now going to have a sort of brisk look through the market. So if I can hand over to Max.
Afternoon. So quickly on Cambridge then. So we were very fortunate to see office activity return robustly in the second half. there are two key, I suppose, pre-let deals which we have referenced, which kind of drove the take-up. And just to talk quickly around those, but the first one being 24 Road, which was a pre-let in the city centre at 20 Station Road, which set a new prime rent at 48.50. This 65,000 square foot letting just shows the confidence, I guess, in the service and co-working sector, which has probably been underrepresented in the Cambridge market compared to other centres of a similar size. But this is despite really the town and its businesses needing that scale up and collaborative space that co-working offers, even more so than very many comparable centres. So it is not surprising that we've seen a couple of very large co-working deals in Cambridge, which is exactly what the occupier market is demanding. The slide shows a picture here of One Cambridge Science Park. That was the largest letting of the year, obviously to MathWorks at 93,000 square foot. I think the interesting thing here, it is a US tech firm, more than doubling its footprint in Cambridge. They are taking the view that they do know that they will be reoccupying the space and their offices in due course. And when they do, for them to succeed, they need to have the best space to attract the best brains. And both of these deals obviously saw new prime rents. It was the new prime rent for the parks at kind of £36, which saw the rising of Science Park rents by over £2 from a deal agreed with Amgem in the first half of 2020. So we saw £2 grow between H1 and H2. Now, this building actually shows both 1 and 2 Cambridge Science Park. Malcolm, the number 2 will be available from Q2 this year, and that will be the largest spec office building to be delivered to the Cambridge market in this year, with about 118,000 square feet, and it will be the only space of plus 50,000 square foot when that is delivered in a few months' time. If we could just move to the next slide. This shows a picture of 1 Cambridge Square at Cambridge North, and that will be the only speculative building which will be delivered and is committed to be delivered of over 50,000 square foot. That will hit the market and be delivered towards the end of 2022. So this 100,000 square foot building just outside Cambridge North Station will be at the kind of communication gateway of the existing Northern cluster and was funded by Schroders during the second half of last year. So, I mean, as Malcolm's mentioned here, despite the number of cranes we see across the city, the majority of these are pre-let, and there just are very, very limited number of options for those larger occupiers which are circling and seeking to upgrade their space. If we could just jump to the next slide. It's worth just obviously talking a little bit about the lab market. And we saw demand really leap during 2020 by almost kind of 50%, just under. And the limiting factor to take up has just been the shortage of available space. But the interesting story, I guess, in demand, as we've seen office demand slightly soften during 2020, which wouldn't be unexpected, we saw lab demand pick up the slack, and actually it moved from representing kind of a long-term average of, say, 25% to almost a third of total demand that we see in the market. During 2020, the active demand, I suppose, was driven by the smaller and medium-sized businesses, and they were mainly seeking fitted space, which is where, but we are also now seeing some of the larger and medium and larger requirements actually come into the market as well. I suppose of transactions of note, the Science Park was very busy with lots of smaller users, both at the Bio-Innovation Centre and Bio-Incubator, where we had a steady stream of occupiers taking space on a monthly basis. And some of the parks to the south, such as Chesterford, which did have some available space, obviously were able to capitalise on really strong rental growth during the year because they were the only people with fitted space really available to go. So I think as we move in to 2021, we are going to see rental growth in this area, and there are a couple of schemes which will come to the market in the second half, but they will be eagerly taken up by very strong demand in this sector. And with that, I will jump over to Milton Keynes, or Oxford even.
Thanks, Max. Afternoon, everybody. By any standards, last year was a pretty extraordinary year for Oxford, and it's interesting picking up on some of the comments by Malcolm earlier, actually, that if you look over at fundraising by these early stage fast growth companies, by comparison with Cambridge, Beauhurst issued a report a few weeks ago, where looking back to 2011, so the last 9 years or so, that the global fundraising comparing Oxford and Cambridge are about the same. And when you bear in mind, as Malcolm picked up, that the increase in number and the growth of number of these companies really has happened in the last 5 years, that explains, I think, very clearly what has happened in the Oxford market. And last year, in fact, was recorded as a record year of fundraising. And we had 3 companies that raised over £50 million each, and there was one, in fact, over 100 million. And so whilst there was this dramatic and large amount of money raised, it was skewed because it was concentrated in, it wasn't spread across all of the portfolio, but there were some very large fundraising deals. And I think this has immediately flown through to real estate, as we've seen this extraordinary rental growth over the last 3 years of 12% per annum, which Malcolm has highlighted. And I mean, just before I start talking about what's happening on the slide in the Jam Factory, if Piers doesn't mind me quoting him on the Science Park, the number of life science companies there has grown from 25 4 years ago to 55 today. And I think that's indicative of what's happened. So looking at 2020, and I'm a great believer in looking forward and up as well. So some of these schemes are looking at what was being built during 2020 and is happening at the moment. The Jam Factory was significant for Oxford in a number of ways, and I know it's been covered quite a lot in the press, but I think it would be remiss not to say cover this again. So it wasn't the largest transactions, 12,000 square feet, but it was pre-let, it was let in competition, and it was let to OUEM. It was significant in setting the rental tone, which Malcolm has touched on, but I think more significantly than that, it's a very iconic building. It's those of you that know Oxford and where it stands, it's a much loved building. It looks absolutely fantastic now, and it really has marked a start to the West End regeneration, which we're Bidwells team are thrilled to be part of, and that's delivering hundreds of thousands of square feet going forward over the next few years. Next slide, please. This is another exciting project which we're involved with in the centre of Oxford again, and this is part of the redevelopment that's going through the planning process at the moment at the Clarendon Centre, and it includes laboratory accommodation, the public realm space that you can see in the middle. So it's a mixed-use scheme, but you can see the building, one of the buildings in the illustration there is of a laboratory facility of circa 50,000 square feet, which is going to help address the imbalance in the lab market. Next slide, please. So another one of our schemes, this is just on the northern fringe of Oxford in Kidlington. This photograph is building 1, which is under construction at the moment, about 30,000 square feet, due for completion in July. But we've also got 2 other developments on this site, which will end up in having about 100,000 square feet built by the end of this year. One is 50,000 square feet pre-let to the Native Antigen Company, which is labs, offices and R&D, and then the Innovation Quarter as well is coming forward. Next slide, please. It would be remiss not to talk about Harwell as part of the scientific endeavour that we're covering today in the office and lab market. This image is Quad 2, which is just breaking ground. That's about 45,000 square feet of more Grade A offices, so helping to address the lack of stock that Malcolm was talking about. But the developments that happened in 2020, Zeus, about 48,000 square feet of office, labs and R&D, was started and completed just at the beginning of this year. In total, it brought the availability with other projects to just over 100,000 square feet. And looking forward, we've got development of about 1.5 million square feet to be done by the mid-2020s. So if you look at stock addition to the market, that's about equivalent to the 10-year average take-up of Oxford happening on the campus. And all this has happened alongside in 2020 the Rosalind Franklin Institute being finished, the vaccine manufacturing facility starting and under construction at the moment, and then there's the National Quantum Computing Centre coming and the National Satellite Test Facility coming as well. So very significant for Oxford. Right, thanks very much.
Thanks, David, and good afternoon to everyone. A few Milton Keynes highlights which really relate to Malcolm's earlier commentary, and in particular the continued lack of Grade A stock and indeed the dearth of larger kit across the ARC. In 2020, the Bidwells team advised joint venture partners First Base and Patron Capital on the acquisition of the former council offices at Saxon Court, together with the parcel of land to the rear of the property. Here we can see a CGI of the proposed redevelopment, which, subject to planning, will deliver a total of 185,000 square feet of Grade A workspace, together with 250 build to rent apartments. Sustainable development which will embrace community collaboration and innovation and provide new public realm space. This fresh and exciting scheme will deliver the next tranche of that much needed Grade A stock in Milton Keynes. And in the meantime, pleased to say that with community in mind, the building is being used as Milton Keynes Mass COVID Vaccination Centre. Could move to the next slide, please, Sue. And in terms of larger ready to occupy space, the refurbishment of Whittengate House PC'd in Q4 of last year. And at 35,000 square feet of space, this delivers the largest available single floor plate in Milton Keynes, and was subject to a comprehensive refurbishment delivering BREEAM Very Good certification. And that, as you'll see from some of the images there, incorporates new open grid hybrid ceiling, new VRF air conditioning, newly refurbished common areas, changing facilities, shower facilities. There will be an independent cafe and lounge area and concierge provision there. The lack of Grade A stock, as Malcolm mentioned, is serving to drive up rents on refurbished space, and the quoting rent at Whittengate House is £27.50 a square foot. And I'm pleased to confirm that proposals are out at this level. And then with the forecast growth in new build rents of plus £30 per square foot, as we see that pipeline stock going forwards. We can move on to the next slide, please, Sue. So moving away from central Milton Keynes now onto Bletchley, works have now commenced on the enabling delivery of the new Bletchley railway station, connecting both Bletchley and Milton Keynes to the Varsity line. The station sits on the doorstep of Bletchley Park with Block G, a shell building of 32,000 square feet, having been acquired in 2020 for future conversion to modern HQ space. Now, given Bletchley Park's historical computing and code-breaking legacy, its academic links, access to the Varsity line, and recent wider site investment from the likes of Facebook, we envisage the site will have appeal to IT and cyber tech occupiers and form part of that wider regeneration of much needed regeneration of the Bletchley area. And I'll hand over to Will in Norwich.
Thank you, Holly. Afternoon from a snowy Norwich. Whilst take-up in 2020 was a record low, I think the slightly more positive news is that the second half of the year at 50,000 square feet was better than H1 at only 25. And it looks like this trend is continuing into the early parts of this year. Just to put these figures into context, take up for 2019 was 147,000 square feet, and the previous 5-year average was just over 175,000 square feet. So there really is a bit of catching up to do. For the first time ever, there were no lettings of over 10,000 square feet. We usually have sort of 3 or 4 in the 10 to 15,000 square foot range year on year. But early part of this year, we have actually put a building of 16,500 square feet under offer. So hopefully that'll be signs of better things to come. The supply of available space has remained fairly constant at just over 300,000 square feet. And this is split roughly 45% in the city centre, 55% out of town. Although this figure will be bolstered by the recent announcement from Aviva about the 2 buildings they've got at Borden Business Park, both of which are over 50,000 square feet. Grade A space, as Malcolm said a little earlier, is now only about 35,000 square feet, which is about 11% of the total available stock. The building you can see on the slide is 12 Meridian Way, which is a property we let for Dencora towards the end of last year at just over 17 quid a foot. So that really sort of made sure that the prime rents are sticking with 17 in front of them. Next slide, please, Sue. Just sort of changing the subject slightly, Vantage House is just an example of another building in Norwich City Centre, which we sold and will be going to residential. We marketed it almost entirely during lockdown. We still got a number of decent offers on it. And it eventually achieved 2.3 million, which worked out at £75 a square foot on the gross area and £98 a square foot on the net area. So that's probably one of the last bigger buildings that will be taken out of the office supply and go to residential, and just sort of reaffirms the fact that grade A space is currently very low. And lastly, as far as demand is concerned, again, we are beginning to see a bit of an uptick in terms of more inquiries coming through. We are starting from a fairly low base, and most of the larger requirements are typically 5,000 to 6,000 square feet at most. But you know, office occupiers are beginning to have a look at a few buildings and are beginning to hopefully make arrangements for when they can reoccupy buildings, summer, autumn, whenever it might be. So I think the final phrase from Norwich is the only way is up. On that note, I shall hand over to Saul.
Thank you. Got the graveyard slot, so I will be quick. I think from a capital markets perspective, the real step change that we've seen over 2020 is the amount of capital that is seeking exposure to the science and technology sector. I mean, it's truly eye-watering in its scale, and it's from all parts of the world. And I think, you know, whilst 2020 was a difficult market for many who deal with Southeast offices or some of the big 6 regional centres, I mean, our art markets experienced a very high level of activity and turnover. To highlight a few, I mean, in Oxford, buildings changed hands on the Oxford Science Park to Clearbell. Arlington bought a building at the Oxford Business Park, and there's a wider deal going on there currently. L&G and the university, as part of their joint venture, committed to build the £200 million life and mine building, which is a significant capital sum and project. And then at Harwell, as David has pointed out earlier, activity took place there with Brookfield Core Life committing to the joint venture. Milton Keynes hasn't been alone in getting some of that capital. The picture here, you've got Wavendon Business Park, which was a £25 million, 150,000 square feet sale from M&G to Colmore Capital, who intend to invest in the scheme and provide some very high quality business park space. One of the buildings on Station Square changed hands for just under £24 million and is likely to be involved in some sort of redevelopment and possible repurposing. And currently there is a very big speculative office scheme out for funding at New City Place in central Milton Keynes, which will hopefully demonstrate the weight of capital that wants to find itself into that market too, and we'll see how that plays out. Next slide, please, Sue. Cambridge was probably a bit of a star performer last year, and certainly was a star performer for us. We were involved in 80% of the capital markets transactions in Cambridge last year, which totaled, I think, about £300 million. We did 2 transactions for Brookgate. We funded the Fora pre-let, which Max referred to earlier, with Aviva PSP, and we spec funded 1 Cambridge Square, again, which Max referred to earlier, with Schroders, and they added up to something like £120 million worth of projects. There were a number of existing investments that changed hands. M&G, Brydale, South Cambs District Council, the Cambridgeshire County Council were involved in those transactions as purchasers, and Abstract Land acquired land at Peterhouse Technology Park, where they plan to develop something like 300,000 square feet, as well as Railpen and First Pace acquiring a site in the city centre for a mixed-use scheme. So truly exceptional given the circumstances. And what we're seeing in 2021 is that seems to be continuing. Next slide, please, Sue. You've obviously just seen the picture of the 2 Cambridge Science Park assets, which have received a lot of press, which we're involved in the sale of for Trinity College and Legal and General, working with Knight Frank on the Legal and General instruction. And we were also involved in the purchase of some laboratory and offices at the Quadrant on the Abingdon Science Park for Gedan's Science Partners. So far, within 2 months, that's more than £150 million worth of transactions either happened or about to happen. And we see good prospects for the rest of the year. So that's it from me, and I'll hand back to Sue. Thank you.
Thanks, Saul. So we've got a few minutes just for questions, and thank you for everyone who's submitted those. So I'm going to stop sharing so you can see everyone. So a quick one, there's a couple of questions that have come in regarding the issue of labs and offices and sort of the mix of that. So possibly for David or Max, talking about hybrid space and the demand for pure lab space and the demand for the hybrid space. David, do you want to start on that? Because I think Max is on mute still.
Yes, certainly. So in Oxford, the proportion of take up between pre-let and spec space is obviously dictated by supply. So there's been good take up of stock on the business park, on the science park. Bell House scheme went very well, and all the lab space is taken up, and all of the office space is being taken up as well. So effectively, any lab space that is available is taken up, and there is very little available as well. Lab-enabled offices, there are a number of those coming through. I put up the slide earlier for the technology park. the building, their building one, which is a lab-enabled building. We've got, I think it's about 26% or so of it under offer already, and that's ready in July. So yeah, it's certainly in high demand.
Anything to add there, Max?
Yeah, so I missed part of the question by connection, but yeah, in Cambridge, we occupiers have often been forced to look, because of the shortages of lab-ready space, to alternative spaces and make do. It's much trickier with heavy chemistry or heavy biology type uses, but we're seeing occupiers do that with lab-enabled buildings or lab-enabled offices quite regularly. And I think, you know, developers which are bringing forward lab-enabled buildings are having great success at securing those lighter use labs into their spaces, where because of the shortage of lab space. And you know, examples would that be, you know, at the Howard Group Works, they're securing excellent interest from lab occupiers into that building because it's a lab-enabled office, which can enable those people to fit out quickly.
Great, thanks. If I can stick with you just for a second, another question regarding sort of changes in working practices, and maybe then I'll come to Holly on that as well. So just how during the pandemic, what's activity level been like, and how do you see that sort of evolving over the coming year if we do see a change in working practices?
Well, I think we are seeing, obviously, there are businesses which are very tech enabled in Cambridge, and some of them have gone to a complete work from home policy and have actually, on a few rare occasions, actually given back their offices. But actually the interesting and encouraging sign that we see from those couple of examples is that they are all keen and reviewing when they can get back into a new office, and that new office will be of a much better quality than where they were before, because they are seeing the value of bringing people together, but it's going to have to be a much better and innovative environment. So the mix of home working has been accelerated hugely by what we've gone through, but I think the importance of good quality office space is still there, and you're seeing that with those key transactions which have gone through, those larger corporates which need to have top quality space if they're going to, when they get people back, have the best people in their offices and in their camp.
Right, thanks. And Holly, just 30 seconds on that, because it's a slightly different market.
Yeah, so agreeing really with Max on, we've really pushed the accelerator button on agile working. And if we look at that in practice, where we're seeing the re-emergence of the larger inquiries coming back to us, we're starting to see in Milton Keynes probably 20% reduction in the overall floor space of the requirements there.
Okay, thank you.
Agile working.
Thanks to everyone. Thank you all for joining us. It's a really interesting market, and there's so many amazing and fascinating activities that are going on across the Arc, and you know, it's quite an amazing place to be working just at the moment. But I think we can say that's just because of all the work that's gone in for many years to create the region and its heritage. We look forward to seeing you for our next update, and we've got an industrial update next month as well, so hope you will join us for that. Thank you very much, and any questions we haven't got back to, we'll get back to you separately on those. Thank you. Have a good afternoon.